Hello everyone, I'm Dr. Stock, and in this video we're taking a look at what in the world is going on with the markets. Why are they turning red on us these past 2 days? That's exactly what I'm going to talk about in this video. I think that there's a lot of reason that we have building up and it's worth talking about. And also I want to give the outlook on the market tomorrow for what I expect to see based on what we could hear happen. And then also the next 2 weeks that we have after that, what catalysts do we have coming up that could move the stock market up or down, and what exactly we want to watch for between now throughout the rest of 2023, and what are my thoughts on it. So that's exactly what I want to discuss in this video. And if you guys do like my commentary, want to hear more of it, find the link for the Patreon down in the description, click sign up, get access to my Patreon exclusive content, as well as be a member of my private Discord to join me and my community members. With that said, let's go into the trading economics calendar that we have here. All right, so check this out from Monday. These numbers, what you need to know about below 50 is that these are numbers for contraction for manufacturing. There's construction spending being down a little bit, more contraction that we see from that. Let's move on. Up to Tuesday, we have JOLTS coming in 0.5 million, so 500,000 jobs below consensus. The trading economics forecast was almost 11 million, so they missed by about 900,000, almost a million off. Factory orders month over month down negative 0.7. Ex-transportation down negative 0.3. Crude stock oil change down a little bit. There we go. What else we got here? Let's move up to Wednesday. The big thing today in the markets was this ADP employment change, 145,000, when 200,000 was expected. So we had a 25% miss. That is huge, especially when you look back to see what we had for February. This is March's value that we're looking at here. That was a big miss when we look at that. So with that in mind, let's talk about the markets tomorrow. So tomorrow at 8:30 a.m., we have initial jobless claims. And if that number comes in hotter than consensus, significantly hotter than consensus, that can be confirmatory to this sort of economic weakness that of a story that we have playing out right now with the different PMI that's out there, with the employment values. This is another employment value. This coming in higher than the 200,000 mark, significantly so, is downward pressure for the markets because it's confirming the story of economic weakness, and which could be some loosening in the labor market from where we currently sit. So we definitely want to watch that. And if we get that high number, that being downward pressure on the markets, that really emphasizes the importance of what we get on Friday when the market is not open. So I'm going to backtrack to what I think is going to happen to the market. So that puts extra pressure on non-farm payrolls. However, we can't do anything with that on Friday because the market's closed. So if we get surprised tomorrow at 8:30 a.m. with initial jobless claims, I can't imagine that by skyrocketing up above this, maybe a 10% higher than consensus. So 220,000 and upward from there. That could be harmful to us for watching the market go up. Instead, it could go down because we get downward pressure. Even more so because then that also sets up well for non-farm payrolls. Maybe that's also going to be a weak area for us, but we can't trade it. So what do? The market drops, as a matter of fact. So that's something that I'm watching out for tomorrow's market. I think that 8:30 a.m. tomorrow, it's a big catalyst for us, and it wouldn't be necessarily enormous if Friday was open in the markets, but it's just not. And you can see the consensus is for 240,000 for non-farm payrolls. So while you're enjoying your Good Friday and some time off from the markets and maybe just checking in to do some research, maybe just pop in and see what it says for non-farm payrolls, because that can be even more telling for what we see on Monday when the market opens back up on Monday, March 10th. I'm sorry, March. My goodness, it's April. I don't know if I've said March this whole time. Monday, April 10th. You know, I just watched a video with Stocks with Josh. The poor guy said May 4th instead of April 4th. And I was like, oh, man, because I've done that kind of stuff. Matter of fact, I think I've done that several times in this video, and it makes me feel so silly to say that kind of stuff. So Josh, I feel for you, buddy. I hope you laughed about it, and moving right on from there. So I do enjoy the content that Stocks with Josh puts out. If you haven't checked him out, check him out. He's really good. Lots of technical analysis with that guy. Really knows his stuff. Okay, moving on from there. So non-farm payrolls, like I said, that number and also the U.S. unemployment rate, those are definitely things that we want to watch out for. That would be telling for market on Monday. Now for the next week. So Monday, wholesale inventories, you'll notice that was down. If that continues to drop, that'd be downward pressure for us. I think the next thing after that, though, is April 12th, is looking at CPI and the numbers that we get from CPI. So we had 0.4 and 0.5% month over month for when we had that coming out for February. Now that we're getting March's measures, are they going to be more like the PCE and come in soft for us? Because if so, that's upward pressure. Are they going to repeat what they showed us the previous 2 months, coming in hotter than we want? Because if so, that could be downward pressure. We're going to have to watch for that. And that's Wednesday, April 12th. That could most definitely move the markets. We're going to have to see, especially if they do come in hot and give reason for the Fed to continue tightening. Then that's something that could be more further pressure, because right now rates are already up. Borrowing money is already super expensive. They are having the effect that they're looking for with all the quantitative tightening that they've done, with the rate increases that they've done. So moving on from there, PPI, then Thursday, April 13th, we also have that inflation measure. And then we have consumer sentiment and retail sales. So retail sales on Friday the 14th. So inflation, I don't think that that's going to be the big market mover unless we get surprised either by a really low number, so that'd be upward pressure for the markets, or for inflation, if we get really high numbers, downward pressure for the markets. Otherwise, I don't think that they move markets really all that quickly right now. What we're looking for, I believe, is that big, fat R-word recession. So things that could show us the economic weakness to the point of economic contraction instead of growth for 2 or more consecutive quarters. That is what we're looking for. That currently has the markets. I'll show you an image that I had up in one of my previous videos very soon. Retail sales also going to be huge for us to watch that come out. Michigan consumer sentiment. If we continue to see sentiment, economic outlook drop through consumer sentiment, that can also be downward pressure. And then the week following that, now Q1 earnings. Q1 earnings are going to give us the forward guidance for the rest of 2023. And if the banks come out and say it doesn't look good for 2023, you can bet that the market is not going to fare well in the face of that. And that also can be, that can be just downward pressure for stocks in general, watching that happen, and really watch the fleet of safety. Let me move over to the charts, and then I'll wrap things up for you, giving my full 2023 outlook that I have for you for how I see things playing out in the near future and throughout the rest of the year. All right, so this picture that you're looking at is one that I shared in my, it's March 31st actually. So I shared this on Friday of last week, showing the peaks that we had in the Qs, which tracks the NASDAQ 100. And you can see all the different things that caused us to fall from the market rallies that we were experiencing at the time. And this most recent one that I have right here with all the question marks, this is March 31st. This is how we ended the week. And I said, we could possibly rally. We could see that continue maybe higher till we come back to where we're at with this peak that we had back in August of 2022 when the Jackson Hole Summit met. And then we had Jerome Powell come out and be super hawkish and rip us back down all the way into October. So middle of October is when we finally turned around. So this week has not gone that well. I said, what's that question? I said, Q1 earnings could be that thing that causes us to turn around and start heading south again. And so far, that fear is out there, and we're already seeing it through the different economic reports that come out that are already talking about weakness happening in the economy. So let's actually go over to Moomoo now. So here, while we're looking at the chart for Moomoo, what we're looking at is the Qs this time. This time it's not just an image of it, and it shows the next 3 trading days. So here's Friday where we ended, where I had all the question marks. What is it going to be? And that causes us to leave that peak and start dropping back down. Well, apparently it's fear over economic weakness. So every sign that we see is acting as a catalyst. So if it's economic strength signs that we see, you can think significant upward pressure. If we see signs of economic weakness, you can think significant downward pressure. That is currently what's captivating the mind of the market. So that's exactly what you want to be thinking about as you continue to question what exactly is going to happen with the markets. And so there are other influences out there, such as the Fed, how many rate hikes they're going to do right now. I believe that the CME Fed Watch tool is showing that the most likely thing for their May meeting is a pause, but there still is a significant chance for a 25 basis point hike. The inflation report, CPI, PPI, are going to be really big impacts for watching that take place, or for impacting what we get with the CME Fed Watch tool. But back to what we're talking about for the market. So to close the week, tomorrow is our last trading day in the week, and I think that we're going to, depending on what we see at 8:30 for initial jobless claims, that's going to be the determinant for how much weight non-farm payrolls has going forward. So I think tomorrow could be a mixed day, maybe a little bit red for us, unless we get high unemployment or initial jobless claims, which would show further sign of economic weakness. As downward pressure, we see more red. That comes in at 3.5, 3.4. or even 3.6, where it doesn't show us further signs of economic weakness or slowdown or loosening of the labor market, well, then we should be a little bit okay, at least if maybe we even recover a little bit from where we're at right now, drift back upwards. If we do have a high number come in for initial jobless claims, we can't trade on non-farm payroll days, on non-farm payrolls day when it comes out because the market's closed. That could be something that Thursday's report could be something then that triggers a sell-off because we can't trade for Friday to see what happens. Then we have to watch Friday while the market's not open to be a better determinant of what's going to happen on Monday. Those are my thoughts, and I think that we could give up a few percent in this mix. I think that we give up 1 to 2%, depending on what sort of number we get out of initial jobless claims. Now, if we get some sort of major surprise in initial jobless claims to the high side, that there's way more than expected, that could be significant downward pressure from our already sort of fragile state that we find ourselves at in the market, being the emotional beast that it is. So that's something to watch for. If it comes in pretty solid, 3.4, 3.5, 3.6, any one of those three numbers that we actually see confirmatory information of still a tight labor market with the initial jobless claims, then that's something that I think allows us to relax and breathe a little bit because it takes some pressure off of Friday's numbers. All right, let's look at the SPY. Boom, 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 click. All right, so SPY, pretty much the same thing. We could have just a little bit of a sell-off in the SPY, and it hasn't had the same climb that the NASDAQ has had recently, so I don't think it's going to have the same fall. I think it's going to be a little bit slower falling, a little bit gentler than what we could see in the Qs if we get reports that put significant downward pressure on the market tomorrow. And like I said, part of that isn't solely contributed to initial jobless claims. It's everything that came before it that points to economic weakness and the fact that we can't trade non-farm payrolls on Friday. So all that pressure then goes on to Thursday with adjustments to be made on Monday, and that's over the short-term, not long-term time horizons. So let me summarize by giving my near-term and longer-term outlook for the markets. Near-term, we got to watch those signs that we get for economic weakness. I think that we're going to get softness in the market, some red to close out the week, and then we'll be set up well for Monday. We'll have to reevaluate once we get Friday's numbers where we think Monday's going to go. I do not think that CPI and PPI, if they come in as expected, I don't think that they're major things that necessarily move the markets. If they come in way too hot, higher than expected, much higher than expected, that could be something that could influence the Fed to possibly tighten more, which clamps down more on the economy, which then turns into possibly even more of a risk of a recession or deeper recession. So that's, I guess, indirectly, or you can call it direct if you want to, that could also be something to watch out for as well. The big thing that I think about is still Q1 earnings. What's that going to look like? And following Q1 earnings, the next big thing that I think about is student loans. So I want to know forward guidance from the companies, the publicly traded companies that we have. How is Q1 for them? What does it look like for Q2? What does it look like for the rest of 2023? That's exactly what I want to hear because that tells me exactly what to expect in the markets and watch them react, hearing about what they have to say. Do they also see recession coming for us, or do they think that the consumer is going to weather this and we're going to still have growth even if it is slower growth than expected, or will we end up in a stagflationary environment? So those are things that I'll be watching for as they come out. I do think that at some point in time during 2023, whether it's following Q1 earnings immediately or at the beginning of student loan repayment, that we start to see softness in Q2 and it really bleeds in heavily to Q3, Q4. I think that somewhere in the next 3 quarters that we see a revisiting of some of these bottoms that we've had before. And when we start to hit that peak fear moment, I think is when I liquidate my short hedge position and I start taking that capital from the short hedge and rolling it into more long positions to hopefully ride the wave back up. Because I do think once we bottom and once we see wherever that might happen to be, I do think that those gray clouds will give way to sunshine before too long. And I think it's going to be a glorious run that takes place after that, which could include significant cuts from the Fed as following the breaking of things. And then that could also possibly turn into stimulus in 2024, depending on what the economy looks like at that point in time. So thank you guys for watching my video. I hope that you enjoyed my commentary. If you'd like to hear more of my commentary, click on that link down in the description for the Patreon, click sign up. join me and my community members that are over there and get access to my Patreon exclusive content, including my Tesla earnings preview that I have over there. And I also have a stock price prediction coming up for Tesla for the Patreon very soon. I have just putting the finishing touches on it. That'll be up on the Patreon. Tesla does report earnings on April the 19th after the market closes. So that's going to be something to watch. And like I said, you can get access to my stock price prediction and also my earnings projection that I have over at the Patreon just by clicking that link and signing up. Thank you guys very much. Click that like button if you like this video. Hit the subscribe button to subscribe to my channel and ring that notification bell to see anytime that my videos come out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.